Market is still at record highs, but we have had the equivalent of a couple of fund managers charging into the street, waving warning flags. Yes, they have been sounding the warning for a long time, but one of them, John Hussman, points to valuations being near record highs, also says he has seen signs of a, quote, Hindenburg and a Titanic in terms of market internals, advanced decline line, and other technical factors. So he is warning about it. And Albert Edwards, another famed bear, has come out with a new scary thing, the vacation indicator. Sarah, what is he talking about?
He says that we should be worried that about 63% of Americans intend to take a vacation in the next 6 months, which is interesting. It's at an all-time high. Why is this bad? He says that it's showing some future wage inflation that hasn't been priced into the market yet. People thinking like, oh, this is coming, and so they start to plan vacations.
So in other words, finally, after 10 years of fear-mongering about inflation, we're going to get a little inflation, the Fed will freak out and slam on the brakes and the market will tank.
That's what he says. Yes, okay. That's what he says.
So, Sarah, is this just the last desperate play by the perma bears before the market doubles from here? Or are they finally onto something?
It's possible. I mean, it's hard to know the timing of when they're going to be right. They will be right eventually, but when they'll be right is a good question.
Because a lot of people think, actually, we just started a new secular market. There seem to be no risk. A lot of the folks that we interview regularly say, hey, valuations are fine. Interest rates are low, earnings growth. So it's very hard to know. I will say that a lot of what John Hussman in particular talks about is very reminiscent to me of the 1990s, where in the second half of the 1990s, every year you would have these famous value investors who had lagged the market for years because they'd been too cautious, be shamed, fired, carried out on stretchers. We're not really seeing that. Hussman has been shamed, which is often a sign that he's going to be right and everyone is going to look very stupid. But he's been wrong for a long time. Same with Albert Edwards, perma bear label. Like, I am concerned about what they're talking about, but boy, is it hard to know when you should really worry about it.
Yeah, and wage inflation is something we've seen a disconnect between unemployment and wage inflation, and the Phillips curve is completely broken down. And a lot of people talk about structural unemployment, and like wage inflation may never come from this correction.
And it is possible that if we do get a little bit of wage inflation, that suddenly may flow through to purchasing power. The overall economy could accelerate. Presumably the market would like that. So again, here we are. But be warned, don't freak out, but nobody should be surprised based on valuations if we suddenly have a 50% drop in the market over a year or two, because that's where valuations are. They're really twice normal levels.